That's the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Jared Blikre joining us now to break down the market action. Jared.
Thank you, Josh. 3 down days in a row. And also, I would add that this is the worst week on track for the worst week since the beginning of August. That would be August 1st. Kind of a nasty day there in and of itself. But let's take a look at the day that was. Not terrible. We're talking about 173 points to the downside for the Dow, or about 0.4% off of the lows here. So it was worse a couple hours ago. Very similar chart for the NASDAQ, also the S&P 500. And let's check in on the small caps, down the most, 0.9%. And I want to show you the VIX as well, because the VIX has been kind of trending upwards. And a lot of times that happens when we see share prices roll over. That's crude oil here. There we go. VVIX. And we also have the actual VIX. Took me a second there, but that's just a little bit elevated today. I will give you the 5-day trend, and you can see we are going to the upside here. I would also mention that September, we all know September is supposed to be the worst month of the year. That's only on average, but that weakness tends to come in the back half of the month. And so that might be what we're experiencing right now, just that tendency. And there's some other factors in play for sure. But here's the sector action. Energy, XLE, that is the only sector in the green, and it's up 0.9%. It is actually broken out of a multi-month base here. I don't have time to get into it, but looking good there for energy. Healthcare down the most, down 1.6%, followed by consumer discretionary and materials, all of those down by 1% or more. If we take a look at the NASDAQ 100, we got some bright spots in the mega caps. NVIDIA up 0.4, Apple up 1.8%, but Tesla down 4.3%. That's in the upper part of your screen there. Also Micron coming off of that huge win, that's down about 3%, so giving back some of those gains. And just finishing up on the Dow, I will tell you that IBM is up about 5%, Verizon up about 1%, excuse me, and more red than green today. And I'm going to send it back to you, Josh.
All right, thank you, Jared. Appreciate it. Well, data storage technology and services company Pure Storage giving businesses greater control of their AI initiatives. The platform looking to deliver true end-to-end data control. To discuss this and more, we have Pure Storage CEO Charlie Giancarlo. Charlie, it is great to see you. So you made a lot of news, Charlie. Let's walk through that news and those announcements. And I guess if I was an investor, Charlie, I'd be thinking, all right, so how does what Charlie announced, how does this news help him get more business with those hyperscalers? How does it help him move deeper into the AI workloads? Walk us through it, Charlie.
Absolutely. Thanks for having us, Josh. Really appreciate it. Yeah, we announced a lot today, and in particular, really clarifying the competitive advantage that we have in the market, but most importantly, describing how AI really changes the way that organizations need to think about their global data and how they use it and how they're able to get access to it. Largely, enterprise data is kept in silos, really hard to access, unique storage environments that are tied to specific applications. It's not at all like the cloud. Instead of it being universally available, instead of it being operating like a cloud, it operates like individual computers or individual application stacks. What we've introduced is the ability of all that data to be networked, the same way that when we as consumers we store our services, our files in the cloud. We can share it with our friends. We can share it with our loved ones. That's not really true of enterprise data. We're making that now possible in the enterprise, allowing them not only to share their data much more easily, to be able to leverage it for applications like AI, but also to lock it down from a cybersecurity standpoint, to allow the organizations to set policies for how their data should be secured and for how it should be stored, so that now they can have software govern it rather than individual hands-on keyboards.
Charlie, I was talking to tech analyst Patrick Moorhead today, and you know Patrick, and he was saying, I wonder how this news, I wonder how Charlie's announcements, how it changes the competitive landscape for Charlie. I wonder how it helps him kind of pull ahead of rivals like Dell, like NetApp. How do you answer that, Charlie?
Well, actually, quite simply, we were the first and now the only company that really saw from our founding data storage is high technology. Most of the other players saw it as a commodity and stopped investing in it. Today, as of today, not only do we invest the most as a percentage of sales in our innovation engine, that is our R&D, but frankly, we spend as much, if not more, than any other player in the market. And so that is allowing us to accelerate, if you will, our competitive advantage and continue to bring value to our customers, which is, at the end of the day, the most important thing.
What about the competition, Charlie, from the private companies, from Vast, data from DDN? What kind of competitive threat does that pose?
Frankly, they were competing and are competing in an area that we did not focus on, which is the very large-scale AI environments that traditionally had been the province, if you will, of scientists, and they competed on benchmarks, whereas we had focused mostly on enterprise. Given that AI came about, we said, okay, what are the assets that we can use while staying true to our pure values, which are single operating environment, consistency, high reliability, and frankly, non-obsolescence of our product. And can we do that at the kind of performance levels that you need for 50,000 GPUs, for 100,000 GPUs? And we took our metadata engine, which is the most powerful metadata engine in the world, and we created a new product with it called FlashBlade Exa. It is consistent with the rest of our product line. It's upgradable from our other parts of our product line non-disruptively. And now our benchmarks are on the order of 5x higher than anybody else in the market. So, we're not worried about the small competitors. We're really focused on doing what we need to do to make our customers happy.
Charlie, you look at your stock this year, it has enjoyed a strong run. And you talk to analysts, they'll chalk that up to ARR growth, Charlie. They also, of course, mentioned that deal with Meta, which investors are excited about. How do you see that deal kind of evolving from here, Charlie?
Well, we're making a great progress with the hyperscalers. Meta was one for sure, but we're making progress in many others. And what we're doing with them is we're also bringing them the power of flash for the bulk of their storage technologies. They use everything from hard disks to SSDs, and we bring them a more consistent, more cost-effective environment. So as they build out their new data centers, we become our system, our solution, our software becomes an alternative to just raw disk and raw SSD.
Final question, Charlie. We talk a lot in this show about the macro. Investors have questions about that. They have questions about tariff uncertainty. Are you seeing that show up in the business anyway, Charlie? I mean, what kind of buy signals are you seeing?
Well, of course, the tariffs have been, a very dynamic environment. It's kept our operations and our supply chain people very, very busy. We're seeing, we have the USMCA, we've got semiconductor allowances, and between all of that, right now, it's not affecting the market, but it remains a very dynamic environment. We do everything we can to eliminate those types of macro situations from our customers. We've done a good job. We have a very broad-based, very distributed supply chain environment. And so far, we've been able to maintain pricing and allow our customers to continue to benefit from the values that we bring.
Charlie, great to have you on the show today. Thanks so much for your time. Appreciate it.
Thank you, Josh. Take care.
Formula One is gaining popularity with viewership on track to hit a record for the 2025 season with an average of 1.4 million viewers per race. It's according to ESPN. Market Catalyst host Julie Hyman and senior autos reporter Pras Subramanian spoke with Zach Brown, the CEO of McLaren Racing, about the business of F1 and its surge in popularity in recent years.
I think it's early days, which is really exciting. So if you look at when Liberty acquired the sport, the things that we needed to do to grow in kind of no particular order, but very important, was crack the code in North America. I think we've done that and are only getting started. We now have 3 races here, as you mentioned, new television rights, et cetera. The movie has been fantastic with Brad Pitt. Mm-hmm. Then we needed a younger audience, which we're bringing in. A lot of that is credit to Netflix, and more diversity in women from a fan base point of view. You put that all together with a budget cap, which has driven more competitiveness. Last year, 4 teams won races, 7 drivers won multiple races. That's kind of the first time in my 30 years of following the sport, seen that level of competitiveness. You have racing teams now lined up trying to get in the sport or writing checks. I know we're talking about value creation for $500 million just to have the right to be a Formula One team. Forget about what it costs to actually acquire a team, where not long ago a lot of teams were in trouble and you were buying them out of administration. We have 24 Grand Prix. We've got demand for about 30. So you put all that together and then put on top of that these great corporate partners that we have that are some of the biggest companies in the world that are also new to Formula One. The sport's on fire.
You mentioned some of those corporate partners, and back in '08 there was teams that had cars with nothing on the car. Right now you have maybe too many sponsors.
No such thing.
So how do you? I mean, a lot of these sponsors are tech companies, big American tech companies. Why do you think the sport is appealing to them from your point of view?
I think especially in the tech space, we use their tech, so there's great authentic storytelling. We've got the Googles and the MasterCards and the Ciscos and the Dells who are all very integrated into our racing team. So I think that's become very attractive. The sport now also is very inclusive, where historically it had been very exclusive. And in today's world, where you need to engage with the fans, not just talk at them, but actually have a conversation with them. And I think Netflix was the start of opening that up. And it took a little bit of time for the sport to get used to it. When Netflix debuted Drive to Survive, 2 of the top teams didn't participate, which was kind of the old school thinking of, no, you can look, but you can't touch. The rest of us went, come on in and look at how the fans responded. And then that's brought in more sponsors. And so I think we're very relevant. And then we're also a pretty cool sport because there's a lot of different reasons why people follow the sport. Is it the drivers? Is it the teams? Is it global? Is it technology? Is it the drama on the track, off the track? So I think there's a lot of different aspects. So when I talk to fans, they all kind of have different reasons why they have fallen in love with Formula One.
You touched on it with the sort of the positive effects of the sport, the growing nature of the sport, and then that's going to lead to higher team values, and reports that McLaren Racing is selling off a stake at a pretty high premium. Do you see that as just the beginning? What can kind of keep that momentum growing? Because we're seeing that across all sports in general.
Yeah, I think I would say great value, not a premium.
By the way, do you want to confirm what the valuation of it is?
I'm not allowed to do that, but I've seen the various reports, and it's not a million miles off. I mean, it's been unbelievable value creation that McLaren's had, that the sport has had. I think it's a supply and demand. Coming back to a few years ago, 5 years ago, if you wanted a team, there was always 2 or 3 in trouble. Now you want a team, you have to write a check for $500 million just to get in. And there's only 11 teams now, where in other major sports, 30, 32, 28, whatever the number may be. So I think there's a scarcity. It's the largest annual global sport, so it's globally attractive as opposed to one specific market. And now with the cost cap in place, every team has a path to profitability and to competitiveness. So if you look at where we were losing significant hundreds of millions of dollars not long ago. Now we have record revenue, record profits, but most importantly, because we're a sports team, that's just a outcome of being good on track and being, having great partnership. We're winning races again, and that's because we're not getting outspent as we were before. So I think you put that all together, the sport's very competitive, globally very attractive, fiscally very responsible, and you put that all together, value creation.
Well, and that sounds like maybe an interesting investment opportunity for public market investors too, or something they might be attracted to. Is that in the works at some point to become public?
Not for necessarily for us, but I wouldn't be surprised to see teams do that. If you do look at the investors that have come in, historically they were a bit of who's that person, but now these are big PE firms, big investors, big countries. So you also see with the increased investment, the caliber of the investors that have come in are the big hitters around the world. And so it's exciting. I think the sport is now kind of caught up to where it should be when you look at the size and scale of Formula One compared to NFL, MLB, NBA, Premier League. We're as big, if not bigger, than the majority of those, and therefore I think all we've done is catch up to where the sport really should have been.
So you talk about running a team like a business, right? And in your book, you talk about you're a racer, but you're also an entrepreneur. I mean, you put together a lot of businesses, not just McLaren, and now McLaren is one of the top teams in the sport. What are some of the things you sort of learn as a racer, but also as someone running essentially a tech company that you talk about in the book and you can kind of instill to young people, but also just sort of leaders in the space?
Yeah, I think, for me, and I think everyone's a little bit different, it was about surrounding myself with great people that were subject matter experts in their respective field. And then my job is I feel like I work for the team, they don't work for me. We have 1,400 people at McLaren Racing. I'm not designing racing cars, so I've got to kind of feed them, give them the technology they need, the people, the racing drivers, the sponsorship to be able to invest in the right tech. So I'm kind of an enabler, but they're the ones that are making it happen, and stability and culture are critical. So, our sport, the worst team in Formula One is really good. So the competition is immense. And so, I wake up every day, I kind of, there's two types of leaders in my experience. Those people that are motivated by the thrill of victory, those that are motivated by the fear of defeat.
Costco is out with its fourth quarter results, and Yahoo Finance's Brooke DePalma joins us now with a breakdown of those numbers. Brooke.
Yeah, Costco results largely came in line with what Wall Street had been expecting here. That's mostly why you see this flat reaction from investors this afternoon, as this is what they had expected going into this report. They had hoped for same-store sales growth of about 6.2%. We got 6.4%, and both revenue and adjusted earnings both beat ever so slightly. So if you take a closer look at where we ended up there, revenue for the fourth quarter did come in at $86.16 billion. That was largely just ever so slightly than what the street had expected of $86.03 billion. Adjusted earnings came in at $5.87. That's $5 higher than what the street had expected. And if you take a look at beneath the hood of those same-store sales growth numbers, like I said, grew 6.4%. Wall Street had been expecting 6.2%. We did see most of that strength actually come from their Canada segment. In Canada, those same-store sales grew 6.3% over in Canada. Other international rose about 8.6%. And here in the U.S., they did see sales increase about 5% and 6% on an adjusted basis. And so largely this goes to show that we continue to see this momentum for consumers to turn to Costco in this environment where consumers are very value conscious. They want the best bang for their buck, and they're clearly willing to pay the membership for it. We do know that they raised their membership price over this past year, and right now consumers are really picky and choosy about where exactly they want to spend, and Costco clearly benefiting here.
Being the retail pro that you are, Brooke DePalma, how would you compare and contrast this report, these results, with what Walmart had to tell us?
Well, keep in mind, Walmart, of course, has the Walmart US, the Walmart International, but they also have that Walmart Sam's Club. And what we saw from Sam's Club, we did see growth of 5.9% there. So largely similar to what we saw here at Costco. Every other retailer is now posting 6% same-store sales growth. So clearly there's a trend here of these wholesale retailers gaining the momentum. What I will say, though, on the flip side, is that Walmart, in addition to their Sam's Club wholesale business, they have a huge back end of convenience, delivery, really winning over consumers right now. And we have seen a huge difference within the year-to-date stock performance for Walmart and Costco. If you take a closer look at that, what we've seen over this past year is Walmart stock surge about 14%. And as you can see on your screen right now, Costco year to date is up only about 3%. And years ago, this was Yahoo Finance's company of the year. They had major, tremendous growth post-pandemic as consumers sought out that value when inflation peaked in 2022. Now we're seeing similar momentum, but there is, still large excitement on the street. There is 24 buys, 16 holds, and 1 sell for Costco, but not really seeing that same return that we see Walmart seeing in this environment.
What do you listen to on the call?
Well, tariffs certainly will be top of mind. We do know that Costco has about 1/3 of its U.S. sales imported. Of course, especially heading into the holiday, we want to hear more about how they're planning out inventory, making sure they have their stocks shelved. And also Chinese imports make up about 8% of U.S. sales for Costco. So certainly tariffs are still top of mind, especially moving into the holiday. And also, Josh, I'm listening out to hear more about gold bars, maybe. Last year we saw e-commerce really surge because they were selling those gold bars. And I wrote a story this time last year about where exactly gold was and the implications it could have for Costco because gold bars were so hot. And last year at this exact time when I wrote that story, gold futures were at 2,700. And now if you take a look at gold futures, they're up at 3,780. And so clearly there's this momentum. So did they also contribute to e-commerce sales for Costco this quarter? I'll be listening for that.
Thank you, Brooke. Appreciate it. All right, starting off on the Federal Reserve, we're going to be getting some more commentary on Friday from a couple of Fed officials, Richmond Fed President Tom Barkin, Michelle Bowman, the Fed's top bank cop. This coming after a big batch of commentary on Thursday, including Michelle Bowman saying that the fragile job market justifies more interest rate cuts. Speaking of the central bank, the Fed's preferred inflation gauge, that's coming out on Friday. That's personal consumption expenditures, or PCE. Economists forecasting total PCE for August to accelerate to 0.3%, while core PCE slows to 0.2% on a month-over-month basis. And finally, we're going to be getting the final reading of consumer sentiment from the University of Michigan. That number expected to hold steady compared to the prior reading at 55.4, signaling no change in consumers' attitude toward the economy. 55.4 is a historically low reading, indicating consumers still relatively downbeat about current conditions.